Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, with news global trade is losing altitude, with the geopolitical pressure starting to take their toll. But first, US mortgage applications fell again last week, continuing the long string of declines and are 23% lower than year-ago levels. Mortgage interest rates rose to 5.94% in the survey. And the US reported its July trade balance data earlier today, which showed a smaller overall deficit by $10 billion to a 9-month low of $71 billion, broadly in line with market forecasts. That takes their trade deficit to just under 4% of GDP for the first time in a very long time. And the US Fed's Beige Book summaries of regional surveys painted a modest picture of their economic expansion in August. The US may be transitioning to a period of lower growth, but the Fed signal will stay targeting inflation until the effort is successful, no matter what their economy does. A top official said that they will need to see several months of low monthly inflation data to be convinced that rapid price growth is finally cooling, raising the odds they will again raise interest rates by 75 basis points when they meet later this month. And the Bank of Canada raised its policy rate by 75 basis points overnight to 3.25% in a well-signalled change. And China released its August export data late yesterday, and they were weak, even weaker than expected. Their import data was weak as well. Their trade surplus dipped, and that was even after their trade surplus with the US rose in August from July. And China's foreign exchange reserves fell more than expected in August, taking them down to $3.05 trillion, and a drop of $50 billion in a month, and their lowest level since October 2018. And global air cargo markets faltered in July, interrupting the expansion track they've been on. The Asia-Pacific region reported almost a 10% reduction year on year. In Australia, economic activity rose in the second quarter of 2022 by about what was expected to be 3.6% higher than a year ago. The first quarter growth rate was 3.3%. Consumer spending was the bright spot in this June quarter. Exports also performed well. However, elsewhere conditions were pretty mixed. The US Treasury 10-year yield starts today at 3.27% and retracing 6 basis points after deciding some of yesterday's rise was overdone. And the price of gold will open today at $1,717 an ounce and up $15 from this time yesterday. But oil prices start today $4.50 lower at just on $82 a barrel in the US, while the international Brent price is now just on $88 a barrel. At these levels, they're back to price levels in effect at the beginning of 2022, and in fact, at prices that in effect at the pre-pandemic. The weak Chinese trade data undermined these prices today. And the Kiwi dollar will open today at just on 60.6 US cents, a little change from this time yesterday. Against the Australian dollar, we're unchanged at 89.7 Australian cents. Against the euro, a bit softer at 60.7 euro cents. That all means our trade-weighted index starts today at 70.4 and unchanged from this time yesterday. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9.